Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 7th of February. Starting off with Arrow Exploration, which has made a steady start to its life here on the stock market. Here we've got, I suppose the turning point was that bear trap gap reversal below 7.5 pence and that long candle. We've got another long candle now heading to new highs, and it looks as though the shares are in a rising trend channel heading for 14 pence, a target that could be hit as soon as the end of this month. This stage really back below, well below 8 pence, really delaying the upside scenario. On to another stock which is playing ball in terms of the technicals. Here we've got African Pioneer. You can see that the shares just hit that resistance line target that we had from July, 3.5 pence. Come back a bit, but as long as we're above, I suppose, the 3 to 3.25 pence area, looking for further gains. Just how far that might be is suggested by the new line that I'm just drawing now. Which is heading towards the 4.5 pence area, 4.6 pence area actually. And that might be seen by the end of the end of this month rather, while the longer we hold above 3 pence. But a nice gap reversal as well, which gave the clue that the shares were ready to head higher. So charting victory there so far. On to Ascent, which has been one of the more difficult situations to get a handle on over the recent past. But what's interesting here is that we've got this bullish divergence line against the falling price. That normally can be enough to generate a turnaround. And with an end-of-day close above that last gap at 3.2 pence, we should be able to get a reasonable push to the upside. Favoured at destination at this stage up to around the 4 pence area, which is the top, well, it's actually that July resistance line there, so that would be the initial target, but nicely flagged there in terms of that bullish divergence line that this could be a turnaround situation. Moving on to Bizant, which has had a project update today. Thought I might be worth looking at the chart as well. Here we've got the sort of sideways shuffle for the shares, but like to see them hold above the 50-day moving average at 0.14. If they can do that, then there's a chance of a move towards 0.2 over the next few weeks. Moving along to COBR, and here you can see that the shares are also trying to find a bottom there. I like the gap to the upside through the 50-day moving average, and also the rebound off that support line there from back in March last year. Shares also very oversold, so the RSI down at the that low 20s, and that's been a sort of triple bottom for the RSI there. Does suggest that we could have a rebound up towards the top of the post-July triangle at 2.25 pence over the next 4 to 6 weeks, something like that. On to GCM Resources, which is playing ball as well. On the technicals here, you can see that we had that bull flag at the 200-day moving average, a sort of classic setup there, and we pushed higher. End of day close above 6.4 pence, should be enough to get the shares up to 9 pence, perhaps even as soon as the end of this month, and only sub 5, really questioning the recovery there at GCM. Requested stock, at least from somebody on Twitter, is Jangada, and this is actually looking pretty good. Bullish divergence line after that brief bear trap below 5 pence that we had in December, breaking out of the near-term triangle, post-September triangle there, that resistance line at 6.5 pence. Above that, looking for the top of the rising July trend channel as high as 9.5 pence. And that should be well before the end of this month, so quite a decent setup there. On to Ovaco Bio. Here we've had basically a bounce off the floor of this rising trend channel that you can draw from the summer. We broke the resistance line there from earlier last year around the 11.2 pence level, so that was good, and expecting now to hit the top of a rising trend channel from March as high as 16 pence over the next few sessions, really. Big picture target is the top of that 2020 price channel as high as 22 pence if you're a fan of the shares. But it looks as though enough of the base building in the 10 pence zone has been done over the last year. It's been a long consolidation for that particular stock. On to Pantheon, which has perhaps surprised the bears with its massive push higher today. We had the trend line break around 80 pence, which I think I would have alerted people to at the end of last month, and it's I suppose a bonus that we managed to spike so high Today, the target before was around 120, 125, and that's still the target by the end of the month, especially while we hold above the old November resistance at 94 pence. Moving along to a situation which also looks to be obeying charting rules. Premier African. Here, the excitement was the rise in volume that we've seen of late, but also the way that both the 50 and 200-day moving averages are rising. That tends to be the strongest part of the cycle. And the previous suggestion was above 0.25, looking for 0.4, and 0.4 could be hit as soon as the end of this month. So that would be quite a big plus for fans of the stock who have been very patient over the last year or so. Have had to be very patient over the last year or so. Another stock which looks like it's starting to get a little bit hotter in terms of the technicals is Predator Oil and Gas. Here, a bit like the situation at Premier African, we've got the 50 and the 200-day moving averages starting to point up, or the 50-day moving average at least pointing up. We've had this sideways shuffle along that for a number of weeks. Initial target, the 200-day line at 8 pence, and then after that, maybe up to 11 or 12 pence by the end of next month, something like that. But I suppose the key here is that we can hold above last month's resistance at 6.8 pence. That would be the initial starting point or trigger for the bulls to get excited. At this stage, only back below the 50-day line at 5.5 pence, really delaying the upside any further. Brighton royalties have been re-rating quite nicely in the last few days. The unfilled gap to the upside, a very good signal there, and above the old November high at 46 pence. We're looking for the shares to hit as high as 60 pence by the end of this month. But pretty strong setup, especially with those rising 50 and 200-day moving averages and the unfilled gap, as I said. Finishing off with a stock which is for some reason still under the cosh in terms of the bears, but we're just breaking a line of resistance there for Wildcat from May, around 2.7 pence. Weekly close above that, and we could be on our way to pretty, it looks rather ambitious at the moment, 6.5p target maybe over the next 1 to 2 months. If you're cautious, I suppose you wait for November resistance 3.3 to break, but looks like we're breaking that post-May resistance line quite well, and should expect a reasonable push to the upside. That's it for me today. More updates tomorrow.